Welcome to Within the Frame, where we're joined by experts to discuss the most up-to-date issues from across the globe. I'm Kim Mok-yeon. Now, the Bank of Korea is set to open its Monetary Policy Committee meeting on Friday. All eyes are on whether the central bank will lower the country's key interest rate for the first time in more than 3 years. This comes as inflation has shown signs of easing recently, and the rise in household debt also seems to have slowed down. But there are many variables to consider, including local housing prices, as well as the economic situation in the U.S. So will the BOK make a policy pivot after 38 months? And what positive or negative changes might we expect for this? For answers to this, we first connect to Kim Hwa-gyun, Rogers Rainey and Annie Bob Rainey Professor of Banking and Finance at Texas A&M University. Welcome to the show, Professor.
Pleasure to be here.
We're also joined by Kim Yong Jin, Professor at Seogang Business School. Good to have you, Professor Kim.
Good evening.
So let's start our discussion with Professor Hwa-gyun. Before we touch upon interest rates, could you first give us a brief background about the current economic situation here in South Korea? How are we in terms of consumer prices and housing prices?
So recent data from Statistics Korea indicates that the consumer price index rose by 1.6% in September compared to the previous year, down from 2% increase in August. So the figure falls below the Bank of Korea's the medium-term target, about 2%. So clearly, as you mentioned, it's kind of fueling discussions about the pivoting the interest rates. And also reflecting these expectations, I think the bond yields for the South Korean government bonds, I think, dropped slightly. So in terms of housing market, the prices appear to be stabilizing. The KB real estate price index for apartment prices as of September 30, 2024 was about like 89.6, slightly lower than the previous year, but still the Seoul metropolitan larger area has seen about 0.6 to 0.7% increase compared to the last year in terms of weekly price. So the rate of increase has been moderated, but uncertainty still remain regarding the future trajectory of housing prices in South Korea. And household debt remains high, over 90% relative to GDP, though I've seen some reports suggesting slightly decreased between March and June. So I think most people seem to wait for the new statistics release for September. So overall, it's a bit complex situation with some good news and some, more or less bad news. And additionally, the sovereign bonds of the South Korea are set to be included FTSE Russell's index, so-called like WGBI. So this can also have some good impact on the exchange rates, interest rates, etc. So overall, I think it's a pretty dynamic situation as of now.
Right, so it's very complex as of the moment. So given this domestic situation, Professor Yong Jin, do you expect a rate cut this time around? And if so, by how much and why?
Well, as Professor Hwa-gyun explained very well, a lot of analysts and experts actually expecting a 0.25 percentage point rate cut, which I echo to. Basically, there are four factors which might affect the rate cut. And I think, two factors like, slowing inflation and sluggish domestic demand positively affect the rate cut. But, the other two factors like, household debt and geopolitical risks, regionally we have in the Middle East may negatively affect the rate cut. Professor Hwa-gyun already explained that in September, the consumer price just raised like only 1.6%, which is far below the central bank's expectations. So it might affect positively on the BOK's decisions. And now it's just within 1%, right? But when it comes to sluggish domestic demand, it's a retail sales have been really weak for throughout the year. Even though there was surprising 1.7% increase in August, which might not be a long-term trend. And industrial production also has been very weak throughout this year too, except a slight rebound again in August. However, the biggest hurdle the BOK faces in the decision making is the high level of household debt. Still, the amount itself is really, really high to give big hurdle for the BOK to make decisions. The final issue for the BOK to consider is recent geopolitical risks in the wake of the military conflict between Israel and Iran. The global oil prices have surged by 9% in just 1 week, making the largest weekly increase since January 2023. As the conflict eased a little bit in this week, the oil price went down by 4%. However, there are still some worries and concerns about the conflict between the Middle East countries.
Right. So just as Professor Yong Jin just pointed out, some argue that a rate cut could deal a big blow to the nation's household loans and real estate prices, suggesting we should thoroughly review related data and postpone any decision until November. Professor Hwa-gyun, what is your take on that?
I agree with Professor Yong Jin and also with others. So it is quite important to review the data as much as possible in this case. To be honest, I think answers should depend on how much we know about the data, and I'm sure that the BOK knows much more than we do. So I will trust what they say. But I think the BOK, according to the previous remarks given by Governor Lee, I think they were looking both house price and household debt in addition to the typical inflation measures and the output-based real activity measures. And I'm sure that the real exchange rate was also a consideration point as well for the South Korean government, the Bank of Korea. So with the 50 basis point cut from the Federal Reserve and inflation of South Korea cooling down and also some difficulty in slugged the economic activities, I think the BOK at one point I think is under pressure to lower the rate, but at the same time, given that the Fed lowers by 50 basis point, maybe there's some room or leeway for the Bank of Korea to lower by say 25 basis point and then make good excuses or explanations. Well, despite that, the household debt is really big and it can increase if the interest rate gets lower, but still, we're not going to be as big as 50 basis point cuts, so maybe we're okay. It's going to depend on the data, but I think a little more room for the lowering the interest rate at this point compared to about a week or two ago. So I think that's probably what it is. But again, I think the postponing till November for the holding the interest rate is going to be a good idea as well. They don't have to explain too much, given that the household debt is really large, and there's a chance that the apartment price or the real estate price is going to go even further up. So it depends on the risk aversion, I think.
Right. So by postponing, we could have a clearer picture of the economic landscape of the country. Now, following the release of U.S. employment data in October, which significantly exceeded expectations, there are claims against the Fed's September big cut. So amid speculations that the Fed will freeze rates next month, Professor, how do you think this would influence the BOK's rate decision?
It is going to be important. Clearly, after the Fed minutes are released, big majority support the 50 basis point cut, but there were remarks among these people. I know some of them personally, but I think they're very conservative people, but I think they seem to be very careful about well, we support 50 BP cut, but still, 225 cut is fine because, we still don't know the data as much as possible, so we can wait. So I think there's a chance for the freeze the next time, but when we look at the Fed watch, based on the Fed futures, still 25 BP cut in November is about 78% chance, and then about 22 to 23% the staying put. So market still expects some cut, but after the minute released, maybe that can change to more weight toward the staying put. So that's going to depend on the data again. The Bank of Korea, if the 25 BP cut is happening, then I think it will be further pressure down to lower the rate. But I think in terms of if they stay put, then maybe the Bank of Korea is going to acting along that, in that like, oh, maybe we can just lower the rate slightly slower.
Right, so it has a very big impact on decision. So
agree.
following the Fed's big cut, the interest rate gap between South Korea and the US shrank to 1.5%. But if the BOK reduces its key rate by 0.25 percentage points, the gap is to be widened to 1.75%. Professor Yong Jin, how could this affect the currency and other financial markets?
Yes, like you mentioned, if the BOK cut the base interest rate by a quarter percentage point, the rate gap between that of Korea and the U.S. will be, widened to 1.75%. But I don't think this will affect the currency and other financial markets negatively. Think about, the rate cut by, Federal Reserve. They cut half percentage point the last month. Narrowed the gap between the interest rate of Korea and the U.S. And then it actually created room for the BOK to ease by half that amount. So that means 0.25, right? Without putting undue weakening pressure on the currency. Monetary policy and also monetary policy shift in the U.S., China, Japan, and other Asian countries provide the BOK a lot more incentives to cut rate. So I don't think there would be any kind of abnormal problems we would have with those widened gap.
Then, meanwhile, international oil prices are surging amid the expanding war in the Middle East. Professor Yong Jin, how could this influence markets, which recently stabilized at around 1%? And also, how could rising oil prices act as a variable in shaping the nation's monetary policy?
Well, the oil price rally began after Iran actually launched a missile barrage at Israel on October 1st. Israel has sworn to retaliate and said it was, weighing its options. That, might be speculated by analysts to include an attack on Iranian oil infrastructure or nuclear, power plants. Last Monday, Brent oil price rose above $80 per barrel, for the first time since August, after more than 3% daily gain. That followed the largest weekly gain in over a year, roughly 8%, due to raising concerns of spreading war in the Middle East. But on Tuesday, news was spreading that Hezbollah and Israel was negotiating a possible ceasefire, and oil prices dropped by 4%. I actually hope the negotiation, for the ceasefire between these two countries will be fruitful. Otherwise, oil price will go up over, hundreds US dollars, which will lead to higher production costs and consumer prices, resulting in another hike in inflation. Then the central banks of most countries will step back to tighten their monetary policy to handle the inflation caused by these, geopolitical issues, and which will, I'm not sure, I don't want to do that, but which will lead to a big recession in the world economy.
All right, so let's hope for the situation in Israel to be stabilized as soon as possible. Now, in the coming hour or so, two critical economic indicators, the U.S. Consumer Price Index and Producer Price Index for September, are set to be released. Professor Hwa-gyun, what are your expectations on this? And also, how could this influence the Fed's decision-making for November?
As we just keep saying, this data point is going to be important, and it'll probably give more updates to market participants as well. So it's very critical information. So clearly, Federal Reserve, as well as other, the central banks, will eye on this, the statistics release. And I generally expect the CPI will reflect continued moderation in inflation, potentially aligning with the Fed goal of reaching around like 2 So 2.1% or 2, I think, is around the number that I think people are expecting. And I agree with that. And recent reports indicated that inflation has been anyway easing, even between the August and September. And also, according to some of the real-time expectations, I think that seem to be in line with 2%. So I think overall, it's going to be a good number as most people expect, but we never know, right? And also this oil price, the increase can affect the next one, not this one, because this one is going to be based on the last, the activities and things like that. So the new one that's going to be coming from this oil price shocks and things like that may affect the future one. So I think we have some uncertainty, but at least this one probably is going to be a good one. And the PPI, the Producer Price Index, is also expected to show similar trends, indicating that wholesale prices are stabilizing or somewhat decreasing. So this could signal that inflationary pressures are overall not only softening, but I think kind of stabilizing overall, I think, in terms of the long-term trends, which is a good sign. So like I said, the market as of now expects still the 25 BP cut. But after this release, if this turns out to be pretty low, then I think the lowering the interest rate further down, I think it's going to have even more probability.
Right, so we'll have to wait and see for the data to come out. Now, gentlemen, let's also touch upon the semiconductor industry, which is one of the driving forces of Korea's economy, of course. Well, Samsung Electronics recorded its highest ever revenue in the third quarter, but its operating profit fell short of market expectations. The semiconductor business top management even offered a message of apology. Professor Yong Jin, what do you attribute the shortfall to?
Well, this is kind of sad, right? Samsung Electronics third quarter profit was reported to be about $7 billion US dollars, which is a lot less than the market expectations, which was like about $8 billion, $1 billion gap. So, top management apologized for the disappointing performance in the semiconductor business, including AI chips. The rare apology of top management indicate that the challenges facing the company in both conventional and advanced chips are very tough. As Samsung said, its AI chip business with major customer was hit by a delay, while Chinese chip rivals increased the supplies of conventional chips, which caused a decline in its semiconductor earnings. Samsung's late response to the AI chip market increases its reliance on traditional and lower margin chips, making more vulnerable to competition from China. Even worse, demand for smartphones and PCs is slowing down. Samsung is left behind the competition like SK Hynix, which supplies high bandwidth memory chips to AI leader NVIDIA. This means Samsung is losing their competitive edge due to low technological competitiveness. In addition to weakening competitive edge, Samsung's contract chip manufacturing business, which designs and produces some custom-made chips for other companies, continue to lose money. As it is struggling to compete with leader TSMC. And TSMC is providing services to Apple and NVIDIA among its customers. So basically, Samsung's low performance, has been caused by their low technical capability and not advancing in contract chip manufacturing.
Right. So Samsung Electronics proposed strategies to overcome the current situation, including restoring technological competitiveness and restructuring the organization's culture. Professor, do you think the company can see a rebound in the fourth quarter? And what kind of fundamental solutions would you suggest?
Well, I'm not sure in whether their strategy works as they wish. In the technological, especially digital technology area, the speed of change is tremendous. If a company loses its pace once, it is really difficult for them to catch up with competition. This applies to Samsung too. If Samsung really want to make a rebound, they have to be very disruptive to make a new business model and develop new technologies. The way they propose is not that kind, I think. It is just a traditional practice they have been doing, and then that now won't work these days. One more thing, they might need to separate their contract chip manufacturing business from their original businesses. At the moment, they are competing with their customers when they have both their own chips for their product and contract chips manufacturing. Customers may be afraid of leaking their confidential information when they order chips to Samsung. And if in that case, who would like to order the chip manufacturing to Samsung? So they have to make like a bold decision to separate those two businesses.
Right, Professor, thank you for your suggestions. I'm afraid we'll have to leave our discussion there. Many thanks for your insights, both of you gentlemen.
Okay, thanks for having me.
Thank you.
Now, that wraps up our program for tonight. Thank you so much for joining us. We'll be back on Friday at 8:30 p.m. Korea time. Until then, goodbye.